So yeah, let's start with the interface. So as you go to the bot section here, you as always see your active strategies. So these are the strategies that I've been holding for quite a long time. So you can see some Bitcoins Quantum for 3 months already, and new ones is like 21 hours only. So let's say I want to analyze the performance of my Solana trading to USDT bot, because you can see this spike up was insane. So let's see if the performance of the bot has outperformed the HODL strategy or not. Let's see. So we go here, details. Now we can see the bot profit. That's like the exact amount of money in USDT the bot made. You can also switch to Sol to see what's the profit and loss made by bot in Sol. But since we are trading to USDT, for me it makes sense to look at USDT metric. We also have now initial funds displayed. So at the time when I launched the bot, this was my exact allocation, 7.22 Solana and 329 USDT. So if I would stick with this initial balance in my portfolio, then right now the value change would be 261 USDT. So this is compared to the current funds that I have. So the bot been trading, it's been selling and buying Solana. Right now it has the balance of 2.3 Solana compared with the initial one of 7.2 Solana and 532 USDT. And the current value of these holdings is exactly 700. And the total PL is $103. So that's the bot profit plus the value change of the base currency. In this case, that's the value change of the Solana coin, because you know that the base currency can either appreciate or depreciate in its value. So this affects your investment change. So that's why you see this value constantly fluctuating. And it turned out that according to this trading setup, if I would stick with the amount of 7.2 Solana in my portfolio instead of launching the bot, then I would make more money than what I made with current strategy. So that's exactly that you can see here, the value change of your HODL strategy compared with the bot strategy. For example, if you look at Algo, in my case, my bot strategy made me more money, 112 compared with $73. So that's the thing, like you can pair the results of your initial funds and what would be the outcome if you would just hodl that amount of Algo and that amount of USDT in your portfolio, and what would be the return if you launch the bot with these settings. The current balance would be this one, and let's check. Yeah, I mean, all good. Let's go. So as you can see, my bot profit, like the total return, bot profit plus the value change, that's the return, 112. Compared with the $73 that I would otherwise make if I would just hodl that amount of Algo and USDT. So, I mean, this is how you analyze performance. You can select any strategy you have, like let's say Bitcoin. So that was my initial balance. Like back at that time, 3 months ago, as you can see, let me show you. So that was the time when Bitcoin was falling, and I entered the market. You see, right here on the market fall. So I thought that I should have buy the deep strategy, and buy the deep strategy looks like this. Let me just show you with, let's say, this example. It's not switching for some reason. Let's choose Arab to BNB. Okay, let's, yeah. Oh, come on, stop lagging. So let's assume that I think that the price will fall. and I want to buy the dip. So that's the trading setup that I would stick with. Just green light, just limit buy orders here. You see, the allocation would be just in the quote currency. So that's the same thing I did on Bitcoin. I thought it's gonna fall down to 30k, so that's why I set only limit buy orders at that time. So that's why you can see in specifications that 0 Bitcoins at that time and the total of 349 USDC as a quote currency allocated to buy the dip. And that's the outcome. Right now you see this balance of Bitcoins and the balance of USDC. So thanks to this strategy that I decided to stick with, I made in total 218 USD. And that is compared with the result that I would otherwise have if I would just had 0 Bitcoins on my balance. Okay, so that's the thing you can use just to compare whether or not your bot performance is justified compared with the simple hodl strategy. Okay, so the best performing asset, let's see, I can sort my column by the best performer, and that's Bitcoin and Quantum in this case. Notice that now the investment change is different. So let's say I switch to Euro. Now you see that investment change is different. It's because it adjusts the value depending on the native currency that you select. Okay, let's say Canadian dollar, so that would be the result. Okay, so since we make money in USDC, it converts pretty much this USDC in Canadian dollar and shows you the investment change in that case. You can also see that in other currencies, like let's say maybe ruble. Yeah, you see that changes. And you can also sort your bots by the value you investment in, let's say in rubles, or again maybe in USD. That's something that you can always change depending on your native currency preference. So what else can we see here? Let's go back to maybe Quantum. Okay, so you see with the Quantum I can instantly see that the strategy I used, and thanks that I was clever enough to allocate that amount of Quantum and that amount of BUSD 3 months ago to this strategy, so that eventually it brought me $167, which is like almost 40% of the total investment change. So you can see the difference between the bot profit and the current funds. So you see the bot profit is by almost 3%, well actually 2.5%, bigger than the current funds. That's because current funds takes into account the value change of the base currency. So right now it seems like the value of Quantum has depreciated a bit, so that's why I have 39.5%. But in general, current funds, it calculates the bot profit, this amount, plus the investment change. So that's why you see bot made $178, but the total P&L is just 167. So that means that we are right now losing value of Quantum in $11 approximately. So pretty much we are affected by the fluctuation of Quantum, as we have 10.76 Quantums in this exact strategy. And well, as always, you can always check the performance of your bot on a daily basis. You can see pretty much the average return. So well, it looks like around $2.5 per day. And you can also see that in average daily results in the percentage. Okay, the total value change, it also fluctuates because again some strategies, they are exposed to the value change of the base currency, so that's why this value fluctuates. Bots, they make you money in the quote currency, so this also affects the total value. So pretty much you can take a snapshot of total value and compare it the results with the yesterday results, and this value is going to fluctuate. And I guess, by the way, that we're going to change a new metric. I mean, we're going to add this new data input so that you could see the total value change in a way you see it here on a chart, maybe. So there are many things that we still want to implement and to improve the quality of the analytics you get here. But you see what we've made so far is an extensive amount of new features that you can see. You can see the trading time, you can see the total transactions, and also you can check the orders statuses. You can see show errors only, so 0 errors as of today. So that means that it goes smoothly, it executes all of my orders, so everything is great. You can check the performance, you can see the exact data you need basically to validate the performance of your bot and to make sure that it executes the orders the way it should execute it. So yeah, that's what we have as of now. These are my results, and notice that right now I have only one classic bot strategy, which is synthetics trading to USDT. That's because I personally believe that this is a valid project. It's a quite strong one in terms of the ecosystem, network effect, and the product development, and the DAO ecosystem that they are building. I mean, that's insanely great that what they are doing. And in a long-term perspective, I believe in the growth, so I feel like it's gonna go higher, and that's why Classic Bot is the strategy that I utilize, because its performance is going to be way better on the rising market compared with the AsBot strategy, because AsBot strategy is the ultimate solution if you feel like the market is going to move sideways. So that's why at the time Bitcoin was falling, I initiated the AsBot because I knew that it's the best one to buy the dip, and it's the best one to make me money on the sideways market. So that's why you can see 63% for 3 months. That's like 21% per month approximately. I mean, that's a great result, that's for sure. So let's go back to synthetics. It's so far it made me like $23 as of today, because I just launched it. No, actually I launched it yesterday at evening time. So yeah, $23. That's a good result already. So that's why Classic Bot, I feel like it's gonna go like this. So that's why Classic Bot is the ultimate solution for me. What else do we have here? Something that I forgot to cover. So according to the agenda, well, of course, as always, you can backtest the strategy before launching the one. For example, let's check ADA to USDC. Let's say I want to trade it now, and I feel like it's gonna move sideways, let's say. So that's why I'm gonna check the AsBot. And let's assume that I want to have only 60 grids, and I would backtest this. So the outcome would be no, actually let's choose a wider gap, maybe lower over here. Yeah, and let's backtest now. So on this time period from the 20th of July, it would bring me 5.86% of the return. But what if I would stick with the Classic Bot instead, with the same amount of grids? I think it was 60 or something. Backtest, and you see the result will be 7.55%. So that's the thing. I mean, you can still use the original tool we have, which is the backtest, to compare strategies with one another. So The reason why you see classic bot outperforming SBot on this backtest result is because the market was rising during this period of time. But in general, as a rule of thumb, the SBot is the ultimate solution if you feel like the market is going to move sideways. So for example, let's compare maybe 23rd of June until the 9th of August. Let's go 21st of July, actually, not June. And what was the date? 9th of August, right? Safe. And let's see. No, actually, no, I was right. I wanted to check the June, but yeah, I forgot that the only time span for the backtest is like 1 month, not more, so I cannot check what would be the performance from the June. But anyway, the trick here is that, let's say you wanted to check this period, so you select this period of time and you backtest it with different configurations and see what would be the performance on the classic bot or on the SBot. You compare the results. If you see like the classic bot is way better on the rising market for this crypto, then stick with the classic bot. If you feel like the SBot is the best one for the sideways market for this crypto, then stick with the SBot. But based on all the statistical results we made and own experience, my rule of thumb is that SBot is the ultimate solution for the sideways and classic is the ultimate one for the rising market. That's the thing. Let me check if you got some interesting questions. Chris is saying, yes, add more days in the backtest. Well, I mean, this would be great, but don't forget that this would require more server resources. This would be a huge load on the system. So we always focus on the things of the first priority. Backtest with more than, let's say, 2 months of a time span is not the first priority. I mean, it would be great, but it's not the first priority. So that's why we always make sure that bots execution is the first priority, that they run smoothly enough, and that many people can access BeatsCap simultaneously. So that's like first priority things. And of course, the like second priority are minor things like the backtest, date range extension, and anything. So maybe we're gonna add more features to the backtest just to make it better. Okay. Yeah, so let's proceed. You also know that we have now the trailing down feature for the SBot. And the thing about the trailing down is, let's say my LTC to USDT. Let's check what is going on here. So the thing is that if I enable my trailing down now and the price goes below my trading range, which is here, that's the lowest price I have here, 135. If it goes below it, it's gonna plot new limit buy orders, and it's gonna use the quote currency from my available balance, which is here. So it means it's just gonna add more money into the bot so that it can execute more buy orders. And at the time when it executes the first buy order below my initial trading range, it will cancel out my sell order which I had over here. Okay, so here is the biggest concern you might have. What about the base currency which I was supposed to sell here in this order? So the thing is that as of now we are still working on this solution to make sure that it's fully automated and that the bot always sells and buys in balance. But as of now, it will cancel out the sell order and the base currency, which is otherwise now left in your portfolio, is going to be in your portfolio. You just need to make sure that you monitor it, and whenever you need to get rid of it, you sell it manually. So that's the thing now. So that's why I guess we're gonna have either additional bot with another trading down feature, I mean another trading down logic, or we might have two solutions for the trading down. So this one you see right now is the first option for the trading down to trade, and we might make some tweaks and add a second option for the trading down for your active strategy without canceling out sell orders, because we need to cancel out this. Yeah, we need to cancel the sell orders to maintain the maximum amount of limit orders you can have on Binance, which is 180. We cannot go above this number. So that's why we need to, like, we are pretty much forced to close those orders that we can no longer hold in the bot, because we now added a new one, a new limit buy order. So that's the thing. But we are working on the optimization of this one. But as of now, it works in a way that when the price breaches the lower limit of your trading range, it's just gonna use the quote currency from your balance, available balance, and it's gonna buy more. And that way you will see that your value is gonna increase because you now added more money into this strategy. And it's up to you to decide what's your risk tolerance, like down until which level of price you have this risk tolerance. So for example, if I set my stop trading down at the price of 90, that means that down to the price of $90, my bot is gonna plot new limit buy orders, and whenever the price reaches it, we'll execute it. So that way you basically anticipate that the price will eventually revert, it will bounce off, and it will recover the loss you made on this falling market quickly enough, as you basically increased your initial investment allocation. It's not the martingale system, because martingale implies that with each price drop decimal, you increase your investment by like 2 times and more, and it's like exponentially you increase the investment as the price goes down. But it's not the case for the trading down system we have. It's basically just buys more, but not exponentially. So what else do we have here? So as of the visual effects, I mean not at visual effects, but visual improvements and bot performance, once again, like the best feature in my opinion is that you can really see if the strategy pays off. I mean, for example, my DOT to USDT, well, it brought me only $102. If I would just hodl that amount of DOT at the time when I launched the bot, I would make more money. But don't forget that this 279 is pretty much your pending profit. It's like unrealized return. Whereas when it comes to bot trading, the P&L you see here, it's already realized. So that's something that is already in your possession, on your balance. So that's the trick. People think that, well, hodl strategy is the best one, but be honest with yourself. Like, do you always manage to sell at the highest price? Like, are you that lucky to predict the highest price the asset is going to trade in the future so that you will capitalize on this highest price mark? I mean, it's hardly possible. I mean, you can guess the direction of the market based on technical and fundamental analysis, and you can be right, let's say 80% of the times. But I mean, predicting the exact price the asset's gonna trade in a week or 2 months, I mean, that's a hard thing to predict. So that's why you cannot say that HODL strategy is the ultimate solution and it will always bring you the most. It's about the market timing. If you sold at this highest price, then yes, this is a justified thing. I mean, you would make more money just holding DOT if you would sell it at the highest price, let's say today. But the thing about the bot profit, the bot trading is that you don't need to worry about your returns, because every single day it makes you money. Every single day it seizes these opportunities on the market when the price fluctuates. So let's say it swings down, the bot is going to buy, and whenever the price goes higher, it's going to sell. So these are micro trades it makes and ensures that it gives you profit every day. So that's why what really matters in trading is the realized return, not the unrealized return, because realized is something that you have in your balance already. It's kind of tangible. I mean, you can use it, you can withdraw it, you can send it in elsewhere, or you can use it to launch other strategies. Yeah, so some of you have been asking what are the strategies, I mean not the strategies but the tools I use to enter the market or exit the market at the optimal time. So usually I stick with three indicators. That's the moving averages and the volume profile, and also looking at the support and resistance structures. So let's say trading view. Here you have this tool, the volume profile, which is for free. You don't need to have a pro account. It's something you can have for free. So let's, can I replay it? Yeah, I can actually replay on the daily chart. Let's say over here. So that was back in the time when the price started to fall in May 2021. So this is how the volume profile looked like. The price went below the point where we had the most volume traded, and usually that's the bad signal. If we are below the most volume traded, then that's a bearish signal. So I asked myself what would be the next stop, and now I look at the volume profile and see that the next price level at which I had the highest volume was here at the price of 34,000 approximately. And I can even see the support structure formation over here, exactly where I had my volume. So that way you use the volume profile to see where you can expect the price to bounce off, okay, like this. And that's actually exactly what happened, if you can see. So that's the sideways market formation, and then a consequent bounce off this level once we breached 40k. So that's the way you can always use the volume profile. Let's see right now what's the current scenario. We need to extend the volume profile in this case. Let's remove drawings and use it now. It's here. So I'm gonna start with the beginning of this year, January, and let's check it until today. So you see, since we had this prolonged time of sideways market accumulation phase, that's why we now see that the most volume is at this price level, 34k. So as far as we are trading above this level, that's a good sign. I mean, if we breach it and go below, then that's a bad sign. We can drop down to 17k or something. And I mean, it's not 100% guaranteed because it's a lagging, how to say, it's a we use just the historical data, and it just that we can use it to look for some patterns, and once we recognize these patterns that played off in the past, then we can kind of use them to use as a prediction tool, but you cannot rely on it by 100%. It's just that it gives you an idea of what can happen, and you can, based on this idea, construct the optimal bot configuration. That's the exact thing I did for Bitcoin. Once I saw that the next price level at which most likely we will see a bounce off or a sideways market for a while. It was exactly at the price of 34k, so that's why that's the trading configuration I use, and you see how it played well. So 63%, that's a great result. And moving averages is something that you can use to validate the strength or weakness of the trend. I usually use 100 EMA and 200 exponential moving average. We can see the crossover over here. That's a very good sign actually. And if we select 4 hour, then you would see this crossover. You see over here before the plunge, boom, and this was the crossover before the rally. So this is something you should always look at. I mean, of course, there are different kind of indicators in the traditional market and in crypto space. You can even have some custom-based indicators like this one, which is closed, by the way. You can have this one created by community members. I mean, people are monetizing on their knowledge. Sometimes they put it for free and you can use it. Once you found your ultimate indicator custom made, then you can use it. Some custom made indicators you can find in the Beatscap blog. I think I described a few of them that I use sometimes. But apart from that, you can also use the on-chain data, like the one you can have aggregated from the Glassnode. For example, it tells you the money flow on the market and the investment capacity on the market. You can see the inflows and outflows from the exchanges, which can give you some an idea of the weakness or the strength of the market sentiment. I mean, there are lots of things you can use, but do not complicate the simplicity. I mean, you can have 10 indicators, but in reality this doesn't help you. So in my opinion, you just need to find your ultimate indicators. In my case, that's just 3 indicators in the combination with the on-chain data that you can have, like for example this one, custom made like from the VU. You see the Bitcoin NFT price and some other metrics you can use as an on-chain data provider and analyze and see for the patterns and all of that. So that's a great thing about crypto, is that you have this huge community that is really involved in building new indicators and metrics to help us analyze the market sentiment and not just using traditional technical analysis tools. Okay, so that's the thing about trading and how you can use different tools to enter the market or exit the market at the right time, depending on the results you get from the fundamental and technical analysis. Yeah, I mean, yeah, Chris, you are right, and I kind of forgot about the main topic of today, but it's just that people have been asking all the time, and that's something that I always share. So as of the other things that I wanted to show you, it's pretty much that we covered everything, I would say. The trading down, and by the way, it works simultaneously with the trading up. So for example, for Quantum, I can have simultaneously the trading up and the trading down. And the way it works on the trading down, trading up, I think you all know. It's just gonna move your grid setup as the price appreciates. So it's gonna move it higher. And as of the trading down, it works another way. As I said, it's going to cancel out your top sell order so that it can now plot a new order below the initial trading range. That's because we have the maximum limit of only 180 limit orders. and we cannot go above this number. But I think we are about to figure out the trick how to avoid this. I mean, how to kind of be sneaky enough to get out of this limit of 180 levels. I think we might use something like postponed limit buy and limit sell orders, like the stop limit, for example. That's something that we could use as a solution instead of canceling out sell orders from that we have on the initial trading range. So this might be a solution, but we need to make sure that it's gonna work, and before we implement this, we need to test this theory and see how it works. If the exchange flow can keep up with the data inputs, like orders that we send to exchanges and the data we receive from exchanges. Because sometimes, and we actually seen this multiple times, when Binance itself cannot keep up with the order flow it receives from our BitsCap community, because we have this huge army of traders and portfolio managers, all of them simultaneously sending a huge number of orders to exchanges, and sometimes they just cannot keep up, you know. That's the thing. But on our side, we always make sure that we have enough capacity to handle the workload. So yeah, I mean, what you see now as a performance solution, I mean, not the performance solution, but how will you say this? As a dashboard, as a layout you have now in performance here, it's not like the final one. We will add some new features to make sure you guys get the utmost experience and that you can better analyze your strategies and see if the opportunity cost played off. And by the way, I forgot to tell you about the benchmark column we have here. So this one we designed just to show you whether your strategy brings you more money than if you would just trade this cryptocurrency instead. So for example, on this pair you would make only 11%, whereas thanks to the bot I made 16% here. Okay, and as of the Ethereum it's 8.21%. We can check other things like this one. See, you see here that the Bitcoin here is 23%. That's because we take the data from the time we launched the bot, which was back in May 2021. So that's why it takes the price of Bitcoin back at that time and takes the price of Bitcoin today, and that's exact growth, 23%. Whereas here you see my LTC made only 20%, which is lower than compared with the Bitcoin. So if I would hold this money in Bitcoin, I would make 23%. But it has outperformed Ethereum by 1%. So it's kind of in between, you know. But again, don't forget that when it comes to bot trading, you have this thing as the realized return. And in my opinion, you really guys need to diversify in crypto. And I always follow this rule. I have 50% of my total money in automated bots, because that way I ensure that I can buy the dip and I can achieve the dollar cost averaging effect. So that means that I can buy at a better price and I can sell at better price, and that I have this realized return on a daily basis. So I get this money flow to my balance every day. So far that's $963 I made for the last 3 months, I guess. But it doesn't take into account those strategies that I already closed. So it's going to be, in reality, it's more than that. I think it's around 1,400 or something. So 50% allocation to automated bots because of the advantages you get when it comes to automated trading. 20%, I would say that's the manual trading. It's like when you go and manually plot sell and buy orders, take profit, stop loss, and that's something you can do here in the trading section on BeatsCap. But it's a really speculative trading, so it's kind of a not the same effect that you get from automated bots that do everything for you and make sure that they bring you money every day. And the rest is 30%. It's a simple hodl. So in my portfolio I have some coins that I believe will appreciate in future, like significantly, and we talk about a year, 2 years, even 3 years sometimes. So for example, in my case, I have Ethereum. I believe in Ethereum, in 0x, in Quantum for sure, and also things like Solana, which right now I think my Solana is in locked DeFi staking on Binance. It just, you know, if you hodl something, guys, don't just stupidly hodl it. I mean, you can stake these coins and get passive income. Well, semi-passive income, I would say, but pretty much limited risk when it comes to locked staking. And that's something that I do, for example, for Solana. And it just accumulates more of the base currency, which is a great thing. If you feel like it's going to appreciate and its value in like a year or two, why not getting more? Like, why not accumulating more of the base currency while holding this coin? So that's the thing. I mean, and that's the ultimate thing in crypto. Like, that's the ultimate diversification, because you cannot achieve diversification by having multiple coins in your portfolio, because most of them are interrelated. I mean, they move in tandem. Whenever Bitcoin rises, Litecoin rises, and that's not what you want to see. Diversification is when basically coins are not related to one another, and it's hard to find. I mean, it's hard to construct the portfolio which would be fully diversified in the traditional way. So that's why I believe that the best diversification can be achieved by having multiple strategies. So 50% in automated bots, 20% manual bots, manual trading, and 30% just hodl coins. That's the trick. Okay, so let's see what else we have here. Questions. Yeah, well, as of now, trailing down works on the as bot. It's just that since on the classic bot we have a different approach, we are still testing the trading down. But yeah, I mean, that's something you will see for the classic bot. And don't forget that we also have futures trading. You can trade long and you can trade on the Foley market by shorting it. Okay, but don't forget about the leverage, because the more leverage you take, the higher is the risk, because you borrow more money, and that means that in order for the exchange to afford this level of borrowing, you need to have enough of the margin on your account to justify the borrow rate you select. Let's check Binance. Oh, by the way, here's the trick for you guys. If you have multiple accounts, let's say Binance and maybe Huobi, and you can see that on Huobi you can trade Ethereum, and on Binance you can also trade Ethereum. So on Huobi, requirements for trading are lower than on the Binance. So sometimes you can see that. Actually, let's do it now. Let's check. Let's say Algo. No, I think I have Algo already. Yeah, to USDT. And let's say I want to allocate 300 USDT. And in order to do that, the maximum level of amount of grid levels I can have is 30. Okay. But what about same AYA? I hope we have it on Binance. Let's check. Yeah. Oh no, we don't have it. Okay, then let's play with Ethereum in this case. Yeah, my bad. I should have checked it on Binance at first. Yeah, I think we have ADA on both exchanges. So let's say this trading setup, and let's say only 300 USD. Yeah, 15 grid levels is what I can afford. But what about ADA on Huobi? And we go like this. And I think the upper price was around this level. And let's allocate 300. So you see, I can have more grid levels, like 30 grid levels, compared with the fewer number of grid levels that I can afford on Binance. You see, requirements here are lower than on Binance. So if you want to trade Cardano to USDT, then you should stick with Huobi in this case, because their requirements are more less rigid than on Binance. I mean, less strict. So that's why you can play with more grid levels if you want to achieve this high frequency trading rate. So that's the trick. Also, you know that you can only trade one crypto. So let's say I have Bitcoin USDC. I cannot launch the like another bot on the same crypto pair. But the trick is that you can trade Bitcoin to another stable coin. So instead of USDC, you can trade to USDT. So that's the trick. It's pretty much the same as trading to USDC, except the fact that the liquidity on these pairs is different. So I mean, USDT is the top stable coin as of today, but in order to have several strategies launched simultaneously, yeah, you can play with different stable coins. So that's the trick. So on Bitcoin we have TUSD, that's one stable coin, USDT, that's the second one, USDC, I guess. We also have DAI, I guess, yeah, BUSD. I mean, around 5 or even 6 stable coins. So you can have simultaneously 6 strategies trading on Bitcoin. It's just that the stable coin is different, but pretty much the same chart layout, because it's just the stable coin that you switch. Okay, so pretty much that's what I wanted to show you today. What about futures bots? Locking down. It's always game time is asking, are you planning on locking down, trading down behind the most expensive plan? I honestly, I don't know. So I cannot answer on this question. Maybe Paul can answer. If not, then maybe that's something that we cannot share as of now. But I mean, we always make sure that you get the utmost experience. Of course, I mean, it's like in a democracy, you cannot have all people satisfied simultaneously, right? So that's why some of you will always say that it's unfair to have this in this plan and not to have that in this plan. But we try to reach consensus here all the time to make sure that the vast majority of you guys are satisfied with the packages that we have. I mean, subscription plans. So, but speak up. I mean, share your concerns. You can always leave your feedback in the comment section below this video. You can always reach out to the support and share your concerns and exchange your ideas. And we always consider your feedback and always make sure that you guys get the utmost experience. That's the thing. That's the thing about BeatsCap, full transparency and integrity in that sense. We always want to get your feedback. Chris, I'm not sure if I understand the question. Like, can the bot be changed? You mean changed to what? Different grid setup? Or what do you mean? So the profit gets added to the bot. Yes. It always, so the value you see here, it's like, I started with $1,000 on Synthetix today, but as of now it's already 1,018. So that's the bot profit plus the value change of my SNX. So if you see bot profit $3, that means that the value changed by $15. Okay. Yeah, Chris, I mean, with the trading down feature, we are still figuring out, well, different options you can use so that you could switch to different trading down opportunity. I mean, as of now, the trading down, it just accumulates more as the price plunges. So it basically adds more money into the strategy from your available balance in that way. But it cancels out those sell orders on top. So it means that you are left with this base currency that you need now to sell manually if you want to. But we are looking for better solution. And no, I would say not the better solution, but to have different solutions so that you could use different trading down options depending on the strategy you want to have. So I believe that we will have this trading down feature there. You won't need to cancel out your sell orders as the price goes lower. And another one, which is the current version of the trading down, would be the second option. It's just that only a few weeks passed since the implementation of the trading down feature, and even me myself, I'm still playing with this feature and trying to figure out kind of the ultimate strategy when you should stick with the trading down. But as of now, I found it useful on the market scenarios where I see the price falling and I want to buy the dip and I have enough on my balance, extra money to accumulate. I don't want to close my bot. I don't want to set another strategy on this crypto. Instead, I will just let it trail down, and that way it will buy the dip further down. Yep, that's okay. That's pretty much it. If you guys have some questions, I mean brilliant questions and answers, or if you come up with some questions after this webcast, then feel free to reach out here. You can even left your comment in the comment section below this video. You can watch previous webcasts to get more idea of how to trade and what are the tricks you can use. You can find ready-made strategies on BeatsCap blog, like for the bots. You can have it here based on some patterns. You go to trading bot, and here you have automated strategies part 1, for example. So you can grab it, test it, and see if it works for you. Okay. So pretty much that's it, and I really appreciate all of you coming, and yeah, we continue working on new features. We still continue working on the trading down. I think we will have some deviations. I think we will have some forks, as the term you use in crypto, out of the initial trading down that we have now, and we will have some other things you can use, like different trading down logics that you can use, because for different scenarios you require different strategies. That's the thing.